Hello everyone, this is a new series that I'm introducing as of today. So every day after New York close, I'll be doing market review, daily review, and I'll walk you through the price action, intraday price action rather, to see what happened the whole session. So I'm on Nasdaq chart right now. Actually, let me pull ES as well. Let's delete all that, because we are going to be looking at S&T divergences as well. I have um, I have daily volume balance marked out with orange shaded box, which kind of act like a draw on liquidity today. But the thing is, I think the price was rather choppy until the power hour of the last 5 to 10 minutes of trading the New York session. So here, let me go on the 15-minute first, because I've spotted something on the 15 before market opened. So here, before market opened, New York opened, we had a bullish S&T divergence, right? So that kind of set the stage for a bullish open at least. It doesn't indicate that the price has to be trending to the upside, but rather bullish open, New York open is expected, right? So there's the S&T divergence on ES. This indicates the low that causes the S&T should be a safe low, right? To be for the clean order flow, for the one directional order flow, right? So that's the low for Nasdaq, and this is the low for ES. That is essentially an order block, right? Which shouldn't get violated, right? So that turtle soup S&P divergence happened overnight at 1 o'clock, 1 in the morning, before London session or London silver bull. Now let's take a look at price at New York session. That's our primary point of interest, or interest in general. So at New York open, price dumped a little bit and rallied, right? There's an expansion here, energy, displacement, and all that. So it formed a double fair value gap. The lower fair value gap is right there, which acts as an IFED or manipulation area, right? And then we have an upper fair value gap here, which is what we refer as accumulation fair value gap. So that essentially means smart money is accumulating positions. That's what it is. Smart money is accumulating. This is because this is a BISI. Smart money is accumulating long positions here, and then manipulates into IFED to make a rally. Okay. So, and there's also, I'm going to delete this so we can see it better. And after New York Open, there is an accumulation here, right above a CB, which is what? Which is a trapped positions, right? Trapped shorts. So these are the signals or signs that you should be seeking or looking for, tape reading maybe for today, along opportunities, because there's an S&T divergence before New York opens. There is a Judas swing at New York Open with trapped shorts. So this level, this sell side, should not be violated because of that. Shouldn't be violated. Otherwise, market becomes choppy. Okay. And as you can see, price stayed above that level the whole session. Now, if you look at the price action here, it's rather choppy. There's not much going on. However, there's one significant thing. So they run the low, they run the highs here. They're on the buy side, short-term buy side. Let's do a short-term buy side, which was a 5-minute SM2 divergence between ES. So this is an SMT divergence, a bearish SMT divergence. So at the time of this SMT divergence, this rally, I was thinking about a sell model, a 5-minute sell model, which kind of happened actually. So what we have here is we have trap shorts, we have a range high, and we have the dealing range here. Okay, so the dealing range, I'm going to keep it with the dash actually. So that's our dealing range. Range EQ is the mid level, right? It delivered this SMT, the bearish SMT divergence actually delivered price into a discount array, discount PD array. What is it? What is that discount PD array? The discount PD array is the lower fair value gap, or BPR. This acts like as a manipulation. So this became the manipulation. At the time, I was thinking about the lows because of the daily profile, daily order flow, but it failed to go below. So once the most recent CB gets inverted, that's when the idea is invalid. That means, so that tells a lot, okay? What it tells me is, let me just make it cleaner. This is an important fair value gap because it tells the story, okay? Bearish SMT divergence, round liquidity sold off, right? And it failed at a discount array. The moment the fair value at the CB, the most recent CB, gets inverted, that means the whole dump here, this whole price move is a pullback. It is not a reversal, okay? That is the most important part of this daily market review, okay? How do we get a confirmation? Once the fair value gap is inverted, that's when you get the confirmation of a pullback, whether this is a pullback or a reversal, okay? This failed to go below or displaced below further, thus the short idea is invalidated, okay? So it rallied, used inversion fair value gap and also accumulation fair value gap CE. This is a buy with a fair value gap and rallied from there on. There must be an SMT divergence over there as well. Let me check ES real quick. I'm not sure if there is an SMT divergence, but I think there's an SMT divergence, or there should be. Go on the 1 minute real quick. Because at the end of the day, this is manipulation, right? When there's a manipulation, there is always an SMT divergence. That's how you get the confirmation. So what time of the day is it? 12:20. Let's go there. 12:22. Here, there's no SMT divergence. There's also one more thing that I would like to mention also before moving further. At this level, the IFD fair value gap or BPR, whichever you want to use, there is two more PD arrays. There is a breaker block here. You can use that as well. And there is an order block, which is this one right there. You can use either or. Then it rallied, ran the buys one more time, and it failed again. Now, once it runs the buy side liquidity here and inverts the fair value gap, it forms a new dealing range. Now you have a new dealing range. Okay, now I can delete this. I can delete this all price action. I'll keep this because this is the trap and manipulation. This is another trap here because price accumulates below a CB. I'm gonna delete this. Now you have a new dealing range, short-term dealing range. You have the manipulation, expansion. You have a new dealing range, range equilibrium. Then, if you miss the first move, you can always wait for a pullback into range EQ and trade that. So price comes down to range EQ, rejects this Wix CE several times, and that's another entry. Also trades into this discount fair value gap, okay? Comes down there, maybe there is an SMT there. Let's see, I haven't watched the price, honestly. Yeah, there's an SMT divergence there, here. So price comes down, fails to break below again, and rallies one more time. And now with this leg, it was drawn into the daily volume imbalance, and it delivers with this wick. After that, it's just the end of day session of volatility. But if you want me to read through that price action furthermore, I'll say this first of all. I think this was the smart money reversal, expanded higher, came down, right? This is the first stage. Actually, this is the first stage. Whole delivery, internal liquidity is taken out. This is the whole first stage. Then it comes, but in the form of catfish. Okay, that's the most important part. In the form of catfish, meaning the weaker model. Okay, the price was weak today because it was in a short range. Yes, it expanded later on, but the delivery is rather choppy. You'll see a lot of back and forth price action, a lot of discount to premium, or something like that. So, because you can see it here, came down into EQ, one, two, third time. Here's the same deal, one, two, three times, four times in fact, before the rally. So for these days, you should be looking at or trading from either premium to liquidity or discount to liquidity. You shouldn't be trading in the opposite side of the market. So if you're long, you shouldn't be trading in premium. If you're long, you shouldn't be trading in. Actually, let me restate that because I think I made a mistake there. What I was saying is, if you are long, you should be trading in premium. If you're short, you should not be trading in discount. And for days like this, again, what you need to do is you need to find one setup. Okay, one, maybe this one here. Maybe you missed the whole move here. This one, you wait for the trap, buy the long, right, and collapse the trade at the short-term high and call it a day. You should not be looking more trades, okay? Otherwise, you'll end up blowing your accounts. Let's say maybe you missed that move. You waited for the other pullback here into range EQ with S&T divergence. Maybe that could be your trade. If you take that one instead of the other ones, okay, once it delivers into the short-term high, this is where you should maybe take partial, definitely break even your stop loss, and final partial maybe the volume balance, and do not look back. Okay, close the charts and move on with your life. Okay. So afterwards, what happened was this becomes the second stage in the form of second stage reaccumulation in the form of catfish, which delivered into daily volume imbalance. I think the objective of the second stage reaccumulation on the 1 minute was the daily volume balance, right? It doesn't always have to be a liquidity, meaning it doesn't always have to be original consolidation in terms of targets, because market moves two ways, right? Either from volume to volume imbalance or to liquidity, right? So in the context of market maker model could be two things. It either attacks original consolidation, aka liquidity, or it attacks the imbalances, meaning volume imbalance, for fair value gaps, so on and so forth. Okay. Then it formed a new order flow here after the volume imbalance. Now you have a new order block here. So it came up. You have a new order block. Yeah. Obviously, this is easier to see on in hindsight. I mean, I'm not gonna argue with that because the price was choppy today. Because of that, you don't get a clean order flow. So you don't get to see hold on. You don't get to see expansion, retracement into fair value gap, another expansion. You don't see that. The price accumulates a lot. So it came that up, comes down, invalidates fair value gaps along the way, tests the OB, tries one more time, comes back into OB again, and along the way, it violates all the PD arrays, right? Comes down for the third time, for the fifth time, fourth time, whatever, and it rallies from there on. I mean, at this point of time, if you were, I mean, personally, you shouldn't be trading this price action. You should have already longed or stayed flat and called it a day. This is the last hour of the session. Here it comes down into that order block, rallies afterwards. So I would say the moment it touches the daily volume imbalance, I think that's when you should call it a day. Because you technically don't know if it's gonna invert the volume imbalance or not. Yeah, it did, but at the time of the session or during the session, you don't know whether this one's the CE of the volume imbalance, high of the volume imbalance, low of the volume imbalance. You don't know when it's gonna fail or if it's gonna fail. Okay. So overall, this is how it looks like. Here the range EQ comes down, rallies. So some folks will ask me why am I not looking from this low to this high, because you can do that too. There's nothing wrong with that. Same deal. The reason I'm looking at this one right here is because this is the 5-minute dealing range. Whereas if you look at this one, this is the 1-minute dealing range, which gives another opportunity to go long. It tests the range EQ, rejects it. Okay, once it rejects that, you can target the short-term buy side. But be mindful of SMT divergence. If there's an SMT divergence, like for example, if you were trading ES here, you wouldn't get your partial at the short-term buy side. So be mindful of that. Maybe you wanna close your position once Nasdaq targets the high, because ES was the weaker pair. So manipulates one more time into IFED fair value gap, rallies. With that rally, you have a new dealing range now because you have a new order block. So the manipulation of the last manipulation becomes the order block. You can also, so whenever there's a new order flow or a new order block, now you have, because you have a new manipulation, you can actually look at the standard deviation of that manipulation and maybe target that, maybe like -1. Here -2 was also a tag. In this case, if I was to be long here at the range EQ, I would probably collapse my position at -1 or maybe daily volume imbalance. But would have definitely taken partials at the short-term highs because how choppy price action was today. So yeah, that's it, guys. If you have any questions or anything, please do ask me. I'll be it's another trap. I forgot to mention. This was the defining price action though. Not before, not after. This was the defining thing. Because before this happens, before market traps the shorts, you literally don't know whether this is a pullback or a reversal. Because like if I go on the 5-minute, what you'll see here is, which is what I saw, SMT diverges at this high, turtle soup, right? This becomes the smart money reversal, okay? And because of that, now you have potentially, this is original consolidation, a 5-minute sell model, right? But because it fails to break below, like look at these lows, it's rejecting there. That means it's sweeping the liquidity, meaning it's manipulation. Because it failed, now you ditch the idea of this original consolidation market maker sell model on the 5-minute. Okay, this is conditional. It could have, yeah, it could have just displaced lower, but because it didn't, it just ran the highs and ran to daily volume imbalance. Simple as that. And that's how you understand whether a move is a pullback or a reversal. Okay, that's very important, because then you can build or speculate around that information. You know what I'm saying? Like, but yeah, that's that, guys. I think I'll wrap it up here, as I don't see further. I mean, let me go on the daily chart real quick. So we had a gap up, and then we closed the day with kind of an expansion, like 160 points with a gap. It's looking tough. It's just inverted the volume balance. The only thing we have right now here is the order block, the daily order block, and that's it. Um, I don't know what's gonna happen. I'm still thinking the lows are suspicious, but we'll see. We'll see the narrative. Narrative is more important than a bias, right? Because this could maybe go to all the way up to the rejection line. I don't know that. So we'll see. We'll go step by step, obviously. We're not going to be like shorting this or longing this and holding the price all the way to the all-time highs or all the way to the lows, right? That's not how we trade. We just go step by step. We look at intraday price action, we look at overnight price action, and we decide what to do on a daily basis. So hope you find this insightful, guys. I'll talk to you later. See you on Tuesday in the live stream. I'll be live at 9:15 in the morning Eastern time. Take care.